Let's take that conversation forward. Devang Mehta as well joins in right now. Devang, hi, afternoon. Many are having that missed out feeling when it comes to the moves in some of the energy names. Where do you think there's still value and scope to buy in right now?
Afternoon, Aisha. Thanks for having me on the show. Yes, I think a lot of people would have this the fear of missing out feeling when they see all these businesses flourish and do well, not only on the fundamental perspective but also on the bourses where they see the prices just moving up. Honestly, after a long while, we are seeing this capex induced rally. Where a lot of government candidates, be it the PSUs or even private, most of this have come to the fore on two things. One, the public capex has been quite strong, be it infrastructure, be it on the capital goods side, right from transformers to energy efficiency to renewables. I think everywhere there has been, to railways to defense, everywhere there has been spending which has sort of increased. Most of this have also been seen as earnings accretive for a lot of companies. Yes, the valuations of these companies have risen, but they have risen from below book value prices for most of these businesses. Also, the private capex has come to the fore. So most of these capital good companies like Siemens or ABB or Hitachi Energy, where we had placed our bets in the last few months and couple of years, they've also done extremely well. So yes, I think this as a theme, if you play capital expenditure, if you play capital goods slash infrastructure, power ancillary power, still there is a lot of money to be made. The next 3 to 5 years, I think this capex probably would go well if everything goes well with the elections as well. My sense is that the spending would again come towards the second half of the year. It might get a little curb in terms of expenditure in the next 3, 4, 5 months, but I think that will probably revive towards the next half of this calendar year. So I think there are still opportunities, but yes, shouldn't get carried away by anything and everything. You need to be a bit more selective.
Okay, point taken. So that's a view coming in on some of these buzzers. But Naresh, if I can get you in the conversation, hospital stocks, we've been pointing it out, but there's a further pressure on Medanta, Rainbow Children's. You also have Jupiter Life, Flying Hospitals, which is down. Some other pharma names like Gland Pharma, etc., are also coming under pressure. Fortis is down 4%. At what level some of these hospital stocks become a buy? Naresh?
Even now, the correction is roughly 10% from the top. Most of these names went up almost 100% in quick time over the last few months. So out here, one has to be better off waiting, because once such a fall happens, you would expect it to go sideways. So in that case, I would still wait it out for a lot of these names, wait for at least a 15 to 20% correction from the top to get in. As of now, the only name which still fits into the category is the fact that Apollo Hospitals closer to 5,800, 6,000 looks like an entry point, because that's not gone up as massively like the other names over the last 3-year period. So on dips, I would go with Apollo Hospitals.
Okay, that's the take coming in on the entire healthcare pack. Let's just take stock of what else has been happening in the market right now. While, of course, the energy names are the ones which are holding out. Even though Motan's scorecard for the month of February was quite good when it comes to at least the passenger vehicle segment, but you have even two-wheelers for that matter. iShares is currently down about almost 3%. M&M as well is lower by about 2% or so. Tata Motors a little bit soft, that one also in trade, and not a whole lot of a move from Maruti, that's also lying flat as we speak right now. Devang, your preferences within the auto pack?
This is one sector which we have been recommending since long, and the call has gone, I can say, completely right in that way. Yes, to be very fair, most of these businesses have seen good bit of growth. Be it passenger vehicles, most of these companies are sort of seeing volumes at a life high. The consumption patterns in India are also changing. The aspirational Indian is more moving towards the traditional hatchbacks to sedan to even SUVs. That's been Maruti has been on record talking about that. One in every third car in terms of your EV is right now Tata Motors in India, at least if you can talk about. Of course, the bulk of the business comes from JLR. iShares itself is a premiumization story that we all understand. And yes, of course, don't look at the monthly numbers, but the story has played out extremely well in the last 6-9 months. Most of these companies have just come out and started to deliver great numbers, not only on the margin front, but also on the volume front as well. Even honestly, if you look at a lot of auto component business which are allied or which are proxy placed towards this type of businesses, they've also started to fare very well. So I think be it passenger vehicles, be it tractors, be it companies related to SUVs, CVs, and even two-wheelers. I think the question was also on two-wheelers. Most of these two-wheelers, including a part of Eicher, Bajaj Auto, even exports have started to fare very well. So my sense is that as our consumption patterns change, and as our per capita consumption of vehicle or passenger vehicle or even bikes and scooters change, I think this is about to change, and I see at least a 2 to 3 year type of a run for this type of businesses.
2 to 3 year run for some of these auto names. But Kunal, in the last few minutes, Tata Chemicals, Tata Communication, Tata Power, all of these Tata group of companies are showing a bit of a perk up. What within this pack has the maximum strength?
So Tata Communication is the strongest one. That stock is back again, I think just closer to the 2000 levels. Excellent momentum for the stock in the last 1 week. Tata Chemical could be a surprise stock, because I think that aspect the stock had been a huge underperformer. It was reeling below the 200 DMA for, I think if I'm not wrong, the last 1 month or the entire Feb series. The stock had shown a sharp correction, I think from 1140.50 is where the correction started for Tata Chemicals, and then the stock fell down to 940 plus 940 odd mark, and now it's seeing a comeback again about 1000 levels for Tata Chemicals. So I would believe that if the stock breaks past about the 200 DMA 1020 odd levels, then we could see a huge rally of sorts for the stock price. So would be bullish on Tata Chemicals from here on, and expecting just one more round of confirmation about the 200-day moving average. That happens, then I think the stock can also see a good 10 to 15% upside.
Okay, that's the take coming in on what's looking smartest when it comes to the Tata Group. The other, bunch of news that we're addressing this afternoon, of course, is BHEL. The fact that it's gained the most since September 1st, 2023. NTPC got an approval for an investment of about 17,900 odd crore rupees in the state of Madhya Pradesh, and BHEL was the only bidder for the construction of this particular plant. But BHEL has clarified that as of now, they've not received any order per se from NTPC. MOIL is the other one, which is also holding out. They've got the best ever production numbers in the month of February, about a 15% uptick on a year-on-year basis. And then there's Angel One, wherein their client base has seen an uptick of about almost 5% on a month-on-month basis. Number of orders have seen a 4% of an uptick, and average daily orders on a month-on-month basis have seen an uptick of about 9% coming in. Devang, along with this strong bull rally, any of the stock market themed names that you're bullish on?
We don't own any of these businesses right now, but yes, it's there. These are companies which should be on the watch list, and honestly, the financialization as a concept which is playing out. One, you can play it via pure play banks. Second, via NBFCs or housing finance companies or some other stuff. But yes, these are companies in the wealth management domain, in the broking domain, in the AMC domain, which are receiving bulk of the flows, right? So AMCs are right now looking at SIPs, which are sort of record breaking almost every month. Even broking volumes have sort of shot up. I think this space looks very interesting. Most of the businesses have actually run up a lot. But yes, on a correction, some of these businesses should be ideally on the radar. As I said, I don't own any of these businesses right now, but these are on the watch list, and looks like an interesting theme probably going forward. And in India becomes more and more financialized, and more penetration starts to happen into equities and wealth management as an asset class.
Taken, but since we were speaking about metals and how that entire sector is in focus, let's listen into the conversation my colleague Asta had with the management of Tata Steel. She spoke with Anurag Pandey, the executive in charge at Tata Steel, and they spoke about a whole host of sectors as well as what's India government doing to support manufacturing. Listen in.
As I am not the spokesperson of Tata Steel, I am the wire division head. So, as you understand, as Mr. Sunil talked about, India is growing at 7-8%. And if India has to grow, the steel has to grow. And then the steel, and if downstream is the steel is what? Wires is what? The downstream business of the steel. So it also has to grow at more than 7%. Now what we can grow, because as Mr. Sunil talked about, there is an import which was happening. So we're trying to import substitution and all is being done. And the government is also supporting us through the PLI initiatives. So I think we all as an industry, there is a plan to invest and grow, doubling our capacity, because currently if you see, India is only 120, 130 million ton steel, and we are talking of 300 million ton steel ministry is talking till 2030. If that is going to double, and then it is important that the downstream units like wires also double.
So, as Sunil also mentioned, are there any products which were earlier manufactured by abroad and now it's switched to make in India projects, or you're making or manufacturing in India?
Yeah, so there is in India it was always a net importer. There was always some imports which are coming in, and but if I talk about tire cord, Sunil touched upon it. Even the tire bead today, which we are doing, there was always a shortage because now the tire industry is also becoming India is becoming a hub of exports of tires, the finished products. So it is important that the consumption will grow in. The industry has to be ensured that it is aligned to that, to the growth of the tire industry, tire majors. So I would say these are the two things. And plus, why we talk of only India now, when we say India is important, why we can't make, as I was speaking, that why we can't make a quality product and export to some of the countries. So that is where the platforms like this, when we say connecting the dots, it is important that as an individual we have some knowledge, but it is these platforms which create, give us a platform where we connect with everybody and try to understand and collaborate.
So, last question to you: any exclusive projects you are investing in or coming up with?
There's no exclusive. It is just we are growing in India while there are things which are on the table, but currently what we are doing is India has to grow at 7%. We are investing in projects which are currently we are manufacturing. We are going to increase their capacities.
Okay, let's move on and let's begin winding up for the day. As we do that, let me take it across to Sharad, get some of the buzz across dealing rooms and the stocks that are being talked about.
Well, yes, in focus we are having CI Automotive. And if you see over here, the dealers are stating that there's a domestic institutions, there's a buying coming in a couple of quarters. And also if you look at the volume, that has also picked up almost 3 times its 20-day average. And today's day trade itself, 1% of equities actually changed hands into bunch trades as well. And of course, the last trade which we checked, Axis Mutual Fund had actually paid its stake as well. Now, the key DIs already invested in the company include Nippon Mutual Fund and Axis Mutual Fund. And importantly, if you look at the triggers going ahead for the company, especially for the European business, is expected to be muted in the near term. But the larger orders, as per our channel checks, is expected to come in for the Mexico and the Indian segment. The stock itself has been on a downturn, roughly giving 14% of losses to the shareholders, but in today's trade today the volumes have picked up and it's expected that the domestic institution buying has been there.
Shara, thank you so much for bringing us that latest on CII Automotives. But let me take it back to Devang and ask him the question on the building material space. We saw the commentary coming in from Tata Steel's cable and wire segment. R. Kabul also talked about how they are looking at growing at 20% consistently. What's your take on the building material side of things, and which segment do you prefer? Is it plywoods? Is it, of course, this entire ceramic play, or now this cables and wires?
Yeah, very interesting theme. Yes, some parts of this have sort of underperformed. If you generally look at the paint side of it or adhesive side of it, for the last 1.5 years, for reasons best known, most of these companies had a bit of a lower volume growth. They underperformed. But yes, with the segment which has grown very fast is something called wires and cables. And we have seen most of these companies also diversifying. This were earlier B2B businesses. Most of this company also sort of are making their retail presence felt in terms of their branding, in terms of even pricing power. There are no more commodity businesses. So companies like Havells or Aracable or Polycab, all these companies have sort of come to the fore and established their own branding in themselves. And some of these companies have shown great numbers over the last 2-3 years, where real estate cycle one, real estate has grown as a cycle in terms of residential sales. Also, there has been a lot of home resales which have also happened. So home improvement as a theme, or building materials, as you rightly said. I think wire and cable is one segment which one can't ignore. And it's also, as I said, it's something, there are 3 or 4 companies which exist in terms of brands. And there is also a bit of durable competitive advantage now to these companies in terms of their pricing power and brands as well. So yes, this segment looks interesting. Ceramics also, in a way, because of a couple of companies, or it's sort of a 3 or 4 players operating in an oligopolistic market, and the unorganized market still larger is getting converted into organized share. I think this segment, couple of these themes inside of building materials or home improvement look rather good.
Yeah, that's the take coming in and some of the interesting names. But Devang, before we let you go, give us a list of any buy ideas that you may have, some conviction names.
I think yes, I would talk more themes than names. Of course, yeah, names would be taken as examples more so rather than recommendations. But yes, we like a couple of spaces, something in motion management. Like people identify Timken India to be more of a bearings company, but it's more into motion management. It does a lot of lubrication automation for this bearings as well. Also into specialty bearings, right from railways to metros to monos to space and to other specialized themes. This is one business which looks extremely good. Another business which is in the energy space, and I think we talked about that, is something called Hitachi Energy. It's been on our radar since long, and we hold it for most of our clients. This company also is more or less into sort of energy efficiency, into automation of power or things which are sort of extremely difficult. And this is again operating in a perfect oligopolistic or a duopoly type of a market. The company's revenues are shooting up out of the roof. Margins have been good. The order book is also right now swelling. So most of these companies, I think, if the capex goes right, would do very well for the next foreseeable 3 to 5 years.
Point taken. Kunal, what about the weakness throughout the IT pack? Would you buy any of these names right now?
Yeah, I think TCS looks attractive. Infosys is something which I would avoid. Tech Mahindra also, I think to a larger extent, is something which I would avoid because both these stocks, Infosys as well as Tech Mahindra, were the first ones to go into a correction, and they've been more into a slow, steady and a gradual correction for themselves. But I think TCS last week or so, the stock had come back towards 4,100, 150 odd mark, which was closer to the previous swing high for the stock. Wipro has been a stock which has been much stronger in terms of the price trends, even though there is not too much of momentum into the stock in the last 1 week. But I think more or less 520, 520, 530 odd levels is where the stock has been trading over the last few trading sessions. So I would probably be a bit more selective into the large cap IT names, but TCS is something which looks attractive at current levels. In case if there is any kind of a dip of another 70, 80 points, say closer to 4,000 odd levels, that could be a good point to try and add the stock further. And for Wipro, I think closer to 500, 505 odd mark could be a good territory if, in case the stock dips down to that another 2-3 odd % from current levels.
Actually, also wanted to mark out Triveni Turbine. I think, Kunal, that's the stock you recommended in the morning as well, that you liked it, but the stock has seemed okay, it's actually down now in the trading session 4%. There was a Motilal Oswal note as well that came in. They talked about how this entire segment is charged up and that they are expecting good growth to come by. Their target was around 570. What's your target, Kunal?
Yeah, so I think close to 555 is where I'd place the target for Triveni Turbine, with a stop loss I think closer to 482.
Okay, point taken. Let's take the BDS Trades as well. Naresh, what's the buy today, sell tomorrow idea?
So first is a buy on NMDC, good recovery from the lows, getting back again closer to the 52-week highs. Stop loss at 237, target price of 250.
Is Vinny there today?
Second is a buy on Tata Chemicals. The stock has made a double bottom recovery, so expecting this to see some follow-up. Stop loss at 990, target price of 1020.
Okay, the Triveni that actually I wanted to spot was Triveni Engineering, because I think that one is the one which is spiking away. Can we pull up the intraday chart? Okay, yes, that stock is up around 7 to 8%. But Kunal, nonetheless, what are your BTST or STBT trades now?
So to buy calls, Tata Chemicals is the first stock. As we were discussing earlier, that the stock is nearing its 200 moving average break. So maybe another percentage point from current levels, the stock would confirm a breakout. 1050 as a target, stop loss to be kept at 970. And Sun TV is the other stock which is showing a triple bottom formation on the charts. So a breakout potentially above 640 levels could be a much more stronger breakout for the stock. 700 as a target. So expecting a strong 10% up move for the stock over the very near term. Stop loss 606.
Okay, that's a sizable price target on Sun TV. 700 rupees is what Kunal foresees on the charts of Sun TV. In the meantime, while BHEL, of course, has been the star performer today, there's NTPC as well, which has climbed up quite smartly. Petronet LNG, which has seen a 3.5% uptick coming in, and Taracom as well. In fact, let me throw it across to Vinny and get in more of the closing trades.
All these stocks have surely been buzzing in trade, but let's look at the Nifty, where it started. It's almost a flat line that we are ending on, nothing exciting that happened. So Nifty managing to close on about the 22,400 levels as of now, up 0.1% in trade. Similar for the Sensex as well. The Bank Nifty, that managed to pick up some pace from the lowest point of the day. As of now, going to be closing with gains of 0.4% in trade. Let's look at the Nifty Energy also, what that is doing, and mid-cap space broader markets, mid-cap doing well, but Nifty Energy, that's the top sectoral gainer today. All those energy names have been buzzing away in trade. NTPC, SJVN, let's pull that up as well. That's holding on to strong gains as well. And when you look at it in terms of BHEL, that's a one to watch out for today. Very, very strong gains for BHEL as well, up almost 12-13% in trade. The biggest single intraday gain that we've seen coming in for BHEL since September 1st, 2023. Other than that, I want to talk about Coal India. That's one that has been buzzing in trade as well today, managing to close on with gains of more than 1.5% as well. We have IOC, BPCL, all these names which have been buzzing away. ONGC, let's pull that up. Power Grid, all of them have seen strong gains today, and that is the Nifty Energy. Nifty Pharma, that's another one that is managing to hold on to some bit of a green today and managing to close with gains of almost 0.3 to 0.4% in trade. Let's pull up some of these individual names that we have, whether you look at it something like a Godrej Properties, that was a one in focus today as well. On the back of a Bangalore area, 62 acres of land that they will be developing. 5,000 crores is approximately the estimated booking values for that. Godrej Properties managing to close with good gains as well. Other than that, in terms of the Nifty that we should watch out for today, we do have HDFC Life that managed to see some good gains today as well. Other than that, Bajaj Auto in the Nifty 50 that we are keeping an eye out on today. And among the losers, what we are seeing is M&M seems like a bit of a pressure that came in from the auto pack today. CLSA had seen a bit of a downgrade that came in from M&M because the stock has already seen a run up. So we're keeping an eye out on M&M today as well. Other than that, the Nifty small cap today, that's where the clear pressure came in. The small cap did not perform as well, and that is where it lacked any shine, any luster, though of the day's lowest point, but down 0.5% is what we're seeing for the Nifty small cap as well. And in terms of the small cap, when you look at it, what we're seeing in terms of a move that came in also, Triveni, Turbine, IIFL, RITES, all these are seeing under pressure as well. So that's how the market is closing like. Nothing exciting in the benchmark indices, but pressure clearly seen on the small cap side, and advanced decline ratio today was in the favor of decline.